The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, just starting a couple of minutes early just to do a quick sound check. So if you can hear me okay, please let me know. Maybe let me know where you're tuning in from and any other comments. But Bill's with us, says all is good in the midst of a thunderstorm. Yikes. Carlos is from Delaware. Craig is from New Jersey. We have Paul from North Carolina. Bernard is with us from Arizona, and he says can hear good. And gosh, our son played college baseball in the U.S., and we sure enjoyed the spring training in Arizona every year when he was there. Pretty fantastic. Stephen from Huntsville, Dan from Iowa, Evelyn from Chattanooga in Tennessee, and Christian from Belgium. Welcome. So great to have you with us. And Steve from White Rock in BC in Canada, and Stephen from Northern Virginia, James from Chesterville or Chesterfi, Kathy from Saskatoon, I can pronounce that one. And Steve, another Steve, great to have you with us. And Lynn, welcome. Lynn's wondering if I've got my dear friend Ollie with me, my cat. And Ollie has been banned from the room just for now. He sent my mouse flying earlier this morning. Murrah, welcome. Doug, welcome. Eduardo from San Antonio, Texas, welcome. Uh, Douglas says getting hot in Seattle. Craig says really like the Saturday webinars. Yeah, I had just tremendous feedback to the webinar on Saturday. And what I taught there about the new buys and the 40-day moving average of RT can be incorporated into the moving average system we're going to learn about today. Moving averages are just amazingly flexible and really can help you in so many ways. Yeah, Lynn says he's supposed to attack the mouse. I never thought of it that way. Oh gosh. And Diane says I really like the web on Saturday also. So that's awesome, the webinar. All right. Well, listen, I'm just double checking here. Looks like everything is go. So I'll just give my official welcome to everyone to our webinar. It's all about mastering moving averages. Just a really kind of a primer on moving averages. I'm going to be talking later on about the full course, 10 lesson course that we offer about moving averages. We teach you everything I think there is to know about moving averages, a very comprehensive course. Um, I've looked at other courses, and this one is much more in depth, much more, with 7 trading systems. And so I want to tell you about that later on as well. So welcome to our webinar. Whether you're watching on GoToWebinar or you're watching on YouTube, it's great to have you here. Really appreciate your being here. Again, I'm Stan Heller, consultant for VectorVest Canada, and I'll be presenting this webinar this afternoon. In the background is Jerry D'Ambrosio, Manager of Educational Content for VectorVest, and so he'll be in the background answering your questions as well. And as you can tell, I'm really excited about the webinar. Anytime we get a chance to teach about moving averages, I get excited because I know how helpful it can be when you have a complete understanding of moving averages, how they work, and the different ways that you can use them as well. What we'll do later on in the webinar is include instruction on a complete trading system that has already proven extremely popular with many of our subscribers. And it's a multiple moving average system called the EMA Squeeze. And I'll give you the complete setup for the long side today. We teach the short side in the moving averages course. But I'll give you the complete setup and trading rules for the long side today. And if you stick with us to the end, we'll make sure you get the complete slide set in the handout section of your GoToWebinar control panel. It's in the and it's in the description in YouTube if you're able to stick with us to the end. And you will get the recording as well, and it will be on YouTube, so it'll be recorded and archived there as well. So lots to cover. So let's get moving. Appreciate again everybody being here with us. So this is our, speaking of questions here, this is our question box for the GoToWebinar. Obviously, you can chat into the YouTube anytime you like over there. But for the the GoToWebinar, here is the question box. You type your questions in here, click on the send button. This box will collapse on you to give you more screen space. So it'll just be this little thin panel here. You can left click up at the top to move it off to the side if you want more screen space. And then when you want to use the chat or ask a question again, just left click on the orange arrow. And very important, because it does happen when you have a large audience. Sometimes you may lose sound or even the video. And if that happens to you, please log out and log back in. That's the fastest, easiest way to get back into the webinar. Okay. All right, so here's what we're going to cover. Really a key concept about moving averages is that they remove the noise and help define the trend to help us predict or at least anticipate if the stock is going to continue to move up or down, whether it's breaking out. We can see that very clearly with the moving averages. And I think we all know how busy a graph chart can get, a daily chart, less so with a weekly graph. But on a daily chart, you can get some really tall candles and it'll kind of really distort our image of the trend. So moving averages kind of help us remove that noise. So what we're going to cover in today's webinar is just 5 key ways that we can use moving averages. We're not going to go into those in depth today. I just want to highlight them for you. We do go into them in depth in the Mastering Moving Averages course. And then I do want to teach you the complete EMA swing trading strategy. It's a complete trading system, to pinpoint high probability buy and sell signals. So it's complete in that way. You don't have to, worry about setting a moving average. You can get alerts from VectorVest or just look at your graphs with the stocks that you own, and you'll see the entries and the exits very clearly. All right, so why are moving averages so important? Again, it's a really simple means of smoothing that price action. It just, even for support and resistance, it just makes it so much easier to identify your lines. And it makes the trend, and really important is that it makes the momentum more discernible. And we go into that in quite a bit of detail. And I'll show you today when we have the moving averages that are really thrusting to the upside, which is what we're looking for with the EMA squeeze. We don't just want them to kind of start moving up. We want a real thrust to the upside, and that's that momentum. And the moving averages make that momentum very discernible. And not only are moving averages a powerful technical tool on their own, but they also form the basis for other technical indicators such as Bollinger Bands, stochastics, and MACD. Okay. So one of the key concepts with regard, especially when we start teaching the EMA squeeze, is that traders with a short-term perspective, these are the swing traders primarily, they tend to prefer the exponential moving averages. And here's why. The EMAs move closer to price and they react quicker to price. So there's less lag. Now there's always going to be lag with moving averages. They're based on price action over a period of days. In the case that we're looking at, it can be the period of minutes or a period of weeks if you're using those graphs. But for the daily graphs that we'll be looking at today, EMAs are going to move closer to price, but there will be some lag time. So for example, in red, I've got a simple moving average of 13 on the price, and I've got an exponential moving average of 13 in green on the price. And over at the left, you can see that they're both moving up. And then on this big red candle, notice it's the green EMA that starts to move down quicker than the red moving average. And we'll just refer to the simple moving average typically as the moving average. If it's an exponential moving average, we'll call it the EMA. So then we come down and the EMA follows the price quite closely, and then it turns around or reacts much more quickly to price when price bottoms and starts to move up. And that's why short-term traders like the EMA the best. And that's why we're using EMAs with our EMA squeeze strategy. And you can really see it on that graph. Okay. And so another key concept is there's 5 key ways to use moving averages. There may be others, but these are the 5 most important ways that you can use the moving averages. So a big one is just to define and invest with the trend. At VectorVest, we pride ourselves on being trend followers, and that's what we teach. And moving averages allow us to identify and invest with the trend, whether it's up, down, or sideways. And again, it helps us determine how strong is the trend, even more so than a candlestick or open high-low chart or graph, because the candlesticks can fluctuate quite a bit, but we see the overall trend with the moving averages. We can identify buy and sell signals to know when the safest time is to buy. We can use moving average crossovers, either a single moving average. We teach that in the course. The 20-period moving average strategy is one of my favorites, and we teach that in the course. And you'll find the safest time to buy and when you need to consider selling. We can use it to determine the broad market conditions. Is there more buying pressure or selling pressure? Is the market healthy and in an uptrend, or is it in a downtrend? So if the moving averages are moving up in a parallel fashion like this, that's a real healthy uptrend. Now, the moving averages could be moving up and still be a little bit unhealthy in terms of the parabolic move up. And I'm sure you know what the parabolic move is. It's basically forming a climatic top where it gets pulled away too far from the moving average and will cause you or cause price to fall from there. So this is a big one, determining how healthy the trend is and how strong is the trend. Is the stock near support or resistance? If your stock is finding support, there's probably a good reason. And we teach that in the Mastering Moving Averages course, and I'll touch on it here. But in VectorVest, we like to use the 40-day moving average. It's a little faster than the institutional 50-day moving average, but both of them really serve as support for a lot of stocks that are in a nice uptrend. So the trend continues until it ends, and they'll find support at the 40 and the 50-day. And again, the 50 is more of an institutional trend. And the reason you get support there is there are a lot of institutions that have rules that won't allow them to hold a stock if price falls below the 50-day moving average. So they step in and start buying that stock at that level. Similarly, the 100-day and the 200-day. And then is price extended? And that's where we really like the 40-day moving average. It helps us determine if price is overextended and far away from that moving average. And there's a whole trading system around reversion to the mean, where if a stock has fallen so far below the 40-day moving average, the most likely move, at least in the short term, is to thrust to the upside and get back closer to the 40-day moving average. So that's a whole other strategy. So when we talk about defining and investing with the trend, here's what we like to look at. There's the EMA 3, which is a short-term trend. You can see it in green. We have the EMA 8, which also is a short-term trend. So the 3 and 8 moving averages are quite a nice combination on their own. We're going to show you the EMA squeeze, which uses the 5 and 8 EMA moving averages for the short term. Then there's a 20 moving average, one of my favorites, medium short-term moving average. Here it is in brown, and you can see it moves quite nicely to the upside when the trend is moving higher. And here we have the institutional moving average. It's really called support and resistance because this is often where institutions will start buying when price gets above the 50-day, or if they already own a position and price falls below the 50-day, they will step in and start to support it and try to get it back up above the 50-day. And similarly, other institutions may have rules where the 100-day, the intermediate long moving average in green, is where they will not allow price to fall below. And so they start to support it at that level. And notice here's the 200-day moving average, which is going to be the furthest away from price, obviously. And when we see these moving averages moving up toward 2 o'clock is a great way to remember the nice smooth uptrend. If it's a nice uptrend toward 2 o'clock, that's ideal. If it starts to move up toward 1 o'clock or 12 o'clock, then we could be getting a little bit parabolic in our trend, and it's a little bit of a concern that the trend may not continue for too long. So that's just another way to remember that. And Robert, we're going to show you the EMAs that we're using for swing trading in a few minutes. We're getting into the multiple moving average swing trading strategy, the EMA squeeze. Okay. So here's a predominantly downtrending stock, FNHC. Doesn't matter which stock it is, but if you're trying to play this stock to the upside and kind of guessing where the bottom is, it's going to be quite difficult. You might find a bottom as we did here, but notice that there's resistance from this 200-day moving average in orange. So you have to anticipate that your trend may be short-lived. You can take advantage of what you see if price is starting to move up and you've got the 3 and the 8 moving up. Even the 50-day moving average is starting to move higher. You could participate in that rally, but just be aware it's going to be a short-term rally, most likely because the predominant trend is down. And sure enough, there's really kind of a bear flag here where we found that resistance at the 200-day, and the institutions, if they own this stock, they just couldn't push it above the 200-day. The retail investors were not the ones who drive the most significant price action. It really is the institutions, and they weren't able to push it above the 200-day, and so down we went. And the moving averages are pointing toward 4 o'clock. As you can see at the right, is a nice way to remember that that is a downtrend. And of course, if they're pointing toward 6 o'clock, it's a significant downtrend. Okay. All right. And again, if you have trouble with audio, you're going to have to log out and log back in. I do believe that it's all working good. Okay. All right. I just want to let you know that we are launching, giving a new launch on September 1st with 6 new mastery classes. And that starts on September 1st. Registration is open. A lot of bonuses with the course, including access to VectorVest software if you don't have it already, access to premium real time for the US market, and Pro Trader. Because we do a lot of moving average crossovers, we give you a lot of searches to go along with our trading systems. I'll show you one search today for the EMA squeeze, but it's launching September 1st. And this was a note I received from Bob, who took the course with us last time. And he just says, "You're a very good teacher, like your style. Appreciate the simplicity of the explanations when you're talking about moving averages. It's important to break it down and really make it clear." So I try to do that. And I'm more impressed every day with your instruction and the content of the series of strategies and systems. So you're getting, different strategies and different systems in the course. Each is very good. And in certain circumstances, I can see myself using most of them depending on the portfolio I am working with. And Rajesh says, "I totally agree." So thank you for that. So let's go into the popular EMA squeeze strategy. Jerry has featured this in the special presentations that occur on the Friday nights. And I presented it to the Financial Freedom Summit where we first started to talk about it. I've been using it for a long time, and I really like it because of it is so simple, and it does clearly identify a trend. So here's what it looks like after a pullback or quiet period where the three moving averages, the 5 EMA, the 8 EMA, and the 13 EMA, all working together, they have squeezed together and they start to pull apart and fan out, trending up. And the more substantial the fan, or the more they pull apart, the more substantial the trend, more thrust to the trend. And using that slope or thrust of the three moving averages after a squeeze, we can predict if the significant trend change is underway and whether it's likely to continue. And we do say predict. We're trend following. We are, sort of anticipating that the trend is going to continue because of that initial thrust to the upside. And here we say it very clearly: a strong upward move increases the probability of a successful trade. Okay. Here are the buy rules. You don't have to write this down. You're going to get a copy of these slides. If you stick with us to the end, it'll be on YouTube under the description. It'll be in your GoToWebinar handout section. But the first rules here, number one, the 5 EMA must be greater than the 8 EMA. And the 8 EMA must be greater than the 13 EMA. Price must be above the 50 simple moving average, that institutional level of support and resistance. If institutions help push that price above the 50-day, or if it's above the 50-day and finding support at the 50-day, and then we get these EMA crossovers, then we're in a good position. We have a high probability for the trade. Okay. RT, our relative timing indicator, very smart indicator for identifying the trend and the momentum behind the direction of the trend. And we want the RT to be greater today than it was 3 days ago. So it's moving up, and that's letting us know that the sort of the hidden momentum behind the price move is also moving in our direction. Okay. Yep, that's a simple moving average. I just said 50 moving average. When I say moving average, it's always going to be the simple moving average. And if I say EMA, or I will always say EMA if it's an EMA exponential moving average. But we slip into the use of moving average whenever we talk about the simple. We need that market to be in an uptrend. In other words, the Goldilocks timing signal in VectorVest, I would say, is the DEW, and we want that to be in an uptrend. You might have a faster signal, such as the green light buyer, and certainly after the market bottom, for example, where you might be going bottom fishing, the green light buyer might be all you want. Just a green light in the color guard, letting you know that the trend is moving back up. Whatever your signal is, the Goldilocks is the DEW. Now here's an important one because people struggle with knowing when to sell. They struggle because they let the stock fall too far. And what this EMA squeeze strategy does, and the other strategies that we teach in this Mastering Moving Average course, is give you the discipline to know when you must sell. You might sell earlier, but there's a line in the sand to protect yourself where you must sell. And in the case of the EMA squeeze, it's when the 5 EMA, the fast EMA in other words, closes below both the 8 EMA and the 13 EMA. If you haven't already taken action, taking some profit, identifying some other warning signs that I'll show you in a minute, this is your absolute must sell. Okay. And the DEW, by the way, KN is an acronym for the detrended price oscillator, envelopes, and a weighted moving average. And we use it in conjunction with our market timing graph. So let's look at these buy rules with a couple of mini graph shots here. Here in the bottom left, we have the squeeze where the 3 moving averages have compressed and pulled together. So that's our squeeze. That's our alert that something could be happening here. And then we get a big candle to the upside. We're still below the 50-day moving average, which is this purple line or mauve line. But we already see that the 3 moving averages are starting to fan out or separate and pull apart. That's what we like to see. And here we get our first candle or price closing above the 50-day moving average. That's our trigger. So we know we're ready to go if the stock moves higher the next day. So the next day, sure enough, we get an open to the upside above the previous day's close. That's our entry candle right there. We have RT rising. That's our relative timing indicator in red here. So it's higher today than it was 3 days ago. Everything is all set up. We're above the 50-day moving average, the simple moving average, and we're in the position. Just give me a 2 if you believe this is something that you can identify, that's easy to spot. The rules are very clear. Just type a 2 in the chat box. I'd appreciate it. Just to let me know, is this something you could do quite easily? Give me a 3 if it's something you would probably need more explanation about. But I'm seeing a lot of 2s come in. Dan H, I think, is a 3, so we'll go through some more examples. Does volume matter? Mark says. Yep, we pay attention to volume. It's not part of the rules, but we certainly want volume to be near or above that 50-day moving average of volume. And Carlos, we can definitely set up for the scans. Thomas G, we'll get going on more explanation. He's typed in a 3 as well. Awesome. Appreciate that feedback. A little more explanation coming. And I see on the YouTube, mostly 2s, just a couple of 2s actually. So that's great. Thank you for that. So the sell rules, again, for that prudent investor, the 5 EMA closes below both the 8 EMA and the 13 EMA, but there are some earlier warning signs. And Jerry, in one of our mastery classes, does an excellent presentation or coverage of the candlesticks And we cover that in the course as well, just one section. And so um, you might use candlestick or some other pattern, but there's a couple of easy warning systems to identify. The first one here at the lower left is price and RT are diverging. So price is still going up. You can see that with the 5 EMA in green still going up, but the RT is hitting a lower high. So that's an early warning. We do like to see that separation or space between the three moving averages, but if it gets too wide, here we're quite far apart between the 8 and the 13. That bigger gap in bands, and it's just visual, it's not scientific, that can be an early warning. And then the big one that's really easy to spot is if the 5 and the 8 are squeezing together. That can be an early warning, particularly if the RT is hitting lower highs. That can be an important warning, and especially if there's a bearish candlestick pattern, you might decide, you know what, I'm going to take profit or cut my losses and get out early. But the line in the sand is when the 5 crosses below the 8 and the 13. That's when you absolutely needs to sell. Ravi, I mentioned on the RT, the relative timing, it is a trend and direction momentum indicator. It's a dynamic technical study in VectorVest exclusive to VectorVest. Okay, so it's an RT or relative timing. Very smart indicator. So here's that example, just sort of spread out a little bit, the whole graph. There's our squeeze. There's where we would have potentially entered the position. And notice you've got a buy rating in on the graph as well, a fairly recent new buy. That's always a good thing. I talked about that Saturday on our international online forum, and I've written an essay about it this week for the Canadian subscriber base, but of course everyone can access it if you have VectorVest. But here's the entry. And we've got a nice fanning out of our three moving averages. A little bit of a compression here of the 5 and the 8. You could take some profit here if you wanted to, or sell half your position if you didn't do it here on this little compression. And then it keeps going up to the upside. And finally, we do have the 5 crossing below the 8 and 13. So it's a nice method of letting your winners run, right? And Carl, I agree with you. You could wait for a price to cross below the 50. My guess is it might have crossed below the 50 here, might have even crossed below here if it had a really long candle. Because remember, our three moving averages are smoothing out that price action. And so if you relied just on the candlesticks, it's not going to be the same strategy. Okay. All right. So that's where you would be out. Now there's another potential buying opportunity here. Things are setting up that way. You would look at the market timing, and that could be another setup. Here's one that I was in, and I got in fairly early using, actually I was in on this setup over here, but here was an earlier setup. We had the squeeze. This is a Canadian stock, but it works in all of our countries, Canada, US, Europe, Australia, and the UK, everywhere where VectorVest has service. Here's our fanning out of our moving averages. We have our trigger candle, and then we have a buy candle the next day. Confirmation. In this case, we've got a buy rating all across the top. We have RT rising, and for the person that asked me about volume, look at the volume down below. This blue line is the 50-day moving average of volume, and boom, we've got a big volume spike, and we're into the trade. We immediately get a little bit of a squeeze here, and actually this candle is a bearish engulfing candle, but our moving averages are holding up quite well. Good space between the 8 and the 13. We stay in the trade. We get another bearish candlestick pattern. We could take some profit now, but the actual 5 crossing the 8 and the 13 is here with about a 32% gain from where we got in. Another squeeze, another opportunity to get into a trade, and just barely above the 50-day on this trigger candle. Here's where we got the confirmation. We're into the trade and another nice long run. And they don't always last this long. I want to be upfront with you. But when they do, you want to let your winners run. You've got a nice uptrend. The 50-day is continuing to move to the upside. RT is continuing strong. Love it. Okay. So again, this is all on the daily graph, and typically I'll start with a 6-month daily graph, and then I may even go to a 3 months just to check that time frame out, and then I'll widen out to a year to see how the stock has performed over a year. And my method is to use the daily graphs with this strategy. It's very much a cherry picking strategy. So here's Sleep Number. On the US side, again, a trigger candle here. The band's really separating on this candle, and we had an open to the upside above the previous close. Great entry right here at about $48. RT was rising. We actually had a big volume spike down below here, and off we went to the races. Certainly on this bearish engulfing pattern, you might have taken some profit. Because this was pretty scary. The bearish engulfing didn't just engulf this previous candle, it engulfed all the candles back to here. so that would be a bit of a worry. I think Jerry would agree. So you might have taken some profit there. But again, you got the squeeze again. You could have even added to your position here, and it never got you out the entire time. So here's Louisiana Pacific. Even before lumber prices really started to rally, this stock was moving up pretty nicely here already. And again, the trigger and then the buy. Big volume on the buy candle. Now you did get a pullback almost immediately. You never got the 5 crossing below the 8 and the 3. So your sell condition was not something that you needed to act on. And then here you got an even better separation. This would have been actually an ideal buy candle here, and away you were to the races. Now here, notice that the 13-day moving average is acting as support right here. We're still well above the 50, and we got support there, and on we went. Here we didn't get the support. Candles fell below the 13-day moving average, but the 5 EMA never crossed below the 13, and off we continued. Now this is a little bit of a busy graph, but some important ideas here. Kinross. So in Canada, we're heavily resource-based, so we're always looking at the gold stocks and looking for a rally of the industry group. And so this was one that caught my eye. And here was that quiet period, or the squeeze right here. And then we have our trigger candle, and the breakout happened to come on a recent new buy after some sort of whipsaws back and forth. But the new buy always confirms a potential sustained uptrend. So that was good. And the buy signal was triggered when the moving averages squeezed together and then change direction, a thrust to the upside. I like that word thrust, where we don't just want the moving averages to cross the 5 above the 8 and the 8 above the 13. We actually want to see the slope moving up toward that 2 o'clock range, okay? And so here we go. We got a nice move to the upside. RT here was hitting higher lows, and so it was also hitting a higher high, higher than 3 days ago. And that's what we wanted on that move. Another quiet period after we did get a sell signal right here. quiet period, another opportunity to get in and buy some more shares, make some more profit, sell signal here and here. Why here? This is the DEW timing signals. So why here would not have this been a buy situation? Because we're in a DEW down. And I would say the 5, 8, and 13 really haven't spread out far enough to make that one worthwhile. And I'll show you some live graphs here in a minute. All right, and then here is, well, health in Canada. This is a really nice quiet period, just hugging that 50-day moving average, which we love to see, and then the trigger and the breakout right here. RT trending higher over 3 days after the pullback, and away we go. So it gives you some rules and some discipline for when to get in. Here we had another squeeze. Even though we didn't get a sell, line in the sand sell, we got another squeeze and we're back in. Okay. Mark says it looks like you could lose a lot of profit if you wait for that 5 to cross below the 13. And sometimes that will happen, Mark. And so there are typically some earlier warning signs. But one thing that you look for is the 50-day moving average still moving up toward 2 o'clock? And so we can maybe suffer a little bit of a pullback as long as we've got that support of the 50-day moving average, which is why another reason why it's on the graph. Great point though, Mark. I appreciate it. And here on this one, volume was absolutely spiking. Beautiful. All right. So the setup. What we know as traders and investors is that the hardest and most time consuming part of swing trading is to find the right stocks with the correct setup early in the trend change. So there's 3 ways that VectorVest makes it easier. You can just go to the stock viewer and it allows you to rank and sort and analyze all the candidates and find the best ones quickly and easily. So that's one way. Now the watch list viewer is my preferred way, where we have premium pre-built watch lists that VectorVest maintains for us. In Canada, we've got the TSX 60, the TSX Composite. We've got energy watch lists. We've got the different capped indice watch lists. We've got some great watch lists. The WOW dividends, the Master Retirement watch list. The US side, we've got the S&P 100, the S&P 500, the NASDAQ 100. Great watch lists, so you can scan those lists very, very quickly. But perhaps my favorite way to identify potential candidates is the Unisearch. It's a powerful search engine to pinpoint potential candidates that already are meeting all the rules that we've set out on paper in the previous slides. Okay. So here are the rules, and we can put them right into our search. We have the stock price, the operator is the EMA, and the EMA 5 has crossed above the EMA 8 in the past 5 days. So we're giving it some time to start fanning out. Okay. And the 8 has crossed above the 13 in the past 5 days. We're not looking for ETFs or closed-end funds in the market. We want that relative timing smart indicator of trend and direction and the dynamic move. We want that to be up from 3 days ago. And stock price, I've got a minimum here of $1. Sometimes, again, we're cherry picking. You might find some lower price stocks that are really setting up nicely. So why not have a look? And then on volume, you could change this to 100,000 for Canada. You'll find maybe some better quality stocks that way. Again, this is a minimum, and I like to look at a lot of stocks when I'm cherry picking. So as long as these rules are being met, I'll look at a lower volume stock. As long as volume is spiking, that would be my key on that. And then the simple moving average, the MA1, is really the price, right? It's a 1 day moving average, so it's price. Price is currently above the 50-day moving average and has been for at least the 1 day. Now this setup requires the Pro Trader premium add-in. It is a premium plug-in module. Now the nice part is if you take the course with us, you not only get the VectorVest software, you get the Pro Trader add-on modules so that you can set up these searches. We show you how to set them all up and how to run them. Okay. All right, so let's use some history to give you some confidence about the system. I've shown you some graphs already, but let's look at some current setups. And then I'd like to tell you about the course, and we want to make sure that we put the slides for today into the handouts in GoToWebinar and in our YouTube as well. So let's just quickly go here. I'm going to go, Jerry in the presentation this morning showed some US stocks and situations there. I'm just going to come in and show you some Canadian side stocks. And so today's date is August 11th, and I've got my search set up. And once you set up your search, and it's quite easy to do. Again, you need that stock split adjusted. The operator is going to be Pro Trader EMA. And then in the value, we just make sure we've got the 5 EMA crossed above the 8 EMA in the past 5 days. And you could shorten that if you want a little, faster action. Again, you're cherry picking, so you might get in a little bit sooner if you shorten this time period. And this is really nice in VectorVest. We can identify or require that both moving averages are moving up. Isn't that cool? We want them both moving up, so we are getting some part of that thrust to the upside already. So I like that. Okay. So here's the stocks. I just went with the top 10. You can change it if you want to look at top 20. You can return them all, and then we just run the search. After you've got your search, by the way, you would click on the save button. Make sure you've highlighted the folder where you want to save the search, and then just click on save, and you can save it with a new name. But let's just have a look at these before I go into the course details. So Capstone Mining, and again, I like to start with a 6-month moving average or a 6-month graph on a daily graph, and I like to start with price off. You notice we can toggle price on and off. Now this one, price is fairly tight. There's one big red candle here, but price is fairly tight. But when I take the price off, the moving averages just smooth all that out. And we're just starting to break out here. And this is what I mean by cherry picking. Here's the day that we ran the search right here at the right edge, but we don't really have that separation of the 3 moving averages. RT is okay. Volume is near that 50-day moving average, so it's okay, but we just don't have that separation. Now we actually did back here on a new buy. So if we ran the search on that day, my guess is we would have gotten Capstone showing up as well. Here is the volume, and it's moved up initially, and then basically is kind of pulled back. But here was the last one back here. Big volume, RT rising. This one, we've got our 50-day moving average moving toward the 2 o'clock. Beautiful. Everything's looking good, and we've had a nice run, and we would have gotten out somewhere about there with about a $1.50 or $1.60 gain on a really, that's about a 20% gain in a very short time. And what I like about it, it's kind of a stress-free gain, right? We just didn't have any worries because all of our moving averages were moving up toward 2 o'clock. Would everybody have sort of recognized this opportunity and kind of seen that maybe we could have made some money here? Just give me a 5 in the chat box if you thought this was a kind of an ideal setup. Here's our squeeze. Anybody like that one? Lynn, Eduardo, Craig, Quinton. Robert says high five. Lots of fives coming in. So you could see that one pretty easily. Not as obvious right now, even though we just did get a new buy. Um, just we don't have the separation of our three moving averages. So we just keep going. Here, the 50-day moving average is kind of falling down, but price crossed above the 50-day moving average right there. Our trigger candle actually triggered today, and we have a little bit better separation. If I go to the three-day or 3 month, I should say, we've got a little bit separation, but for me, the 5 and the 13 have not really separated enough on this one. Okay. This one would have been a pretty good candidate to the downside. And we show you that in the course. But look at this. So back here, we had a potential entry on this candle. We had another little bit of a squeeze here. So another potential entry on this candle. And we didn't get an exit. Even on this long red candle, we didn't get an exit. Although you certainly could have been excused if you took profit there, and you certainly should have taken 50% off even before that. But look at also big warning signs with RT and price falling. All right, so not a great one there. This one I like a lot better. We're on the 3-month setting. Here on the search, we've got the moving averages separating, prices above the 50-day, and the 50-day is rising. Petroleum had been in favor, it's kind of going sideways to down now, but this could be a good candidate. Hardwoods, nice separation, down day today, but certainly this could have been a good entry, and still could be if we get an open to the upside tomorrow. The EMA squeeze, all the rules are in place. Big candles here on these up moves, not too bad. This one, not enough separation. So you get very adept at looking at these very quickly. This one, everything is set up, but I don't like the 50-day moving average. This one is starting to set up a little bit. And this one, Nutrient, I think I like so far the best of all, even though it had a down day today. If we have an up day tomorrow, look at the separation here, and we just need the RT to move back up. All right. And you can just keep going through. Prairie Sky starting to move up, petroleum stock again. Nice fanning out of the moving averages on that one, but a couple of days down. So on you go. All right. And again, Stock Viewer is a great way to find these as well, or the watch list viewer. So let's finish up by going back to the slides. And just to review the rules, we want the market timing to be in our favor, the color guard bullish. On the market timing graph, I like the DEW timing signal, but you can also come in on a green light buyer signal, for example. It's swing trading, so you do want a fairly fast timing signal. We're not long-term investing with this strategy, even though, you could have a stock that turns out to go past sort of that swing trading 10, 15, 20-day distance. Price is above the 50 simple moving average. 5 is above the 8 EMA. 8 is above the 13. RT is trending higher, at least over 3 days. And there's our line in the sand sell rule. So we've covered the EMA squeeze. We've talked about 5 key ways to use moving averages. And I'm very excited to let you know we're launching our Mastering Moving Average course once again with 6 brand new mastery classes. Those are live starting on September 1st. The recordings are all done. They're in VectorVest education already, Thought Industries. And so you have the nice benefit of being able to start accessing the course as soon as you register using this vectorvest.com/MA. Vectorvest.com/MA. I'm sure Jerry will be typing that into the chat box for you. There is a special price for sticking with us through the webinar, $295 US, which I think is about the same or possibly a dollar or two better than the elite pricing, and the regular price is $595 US. So the nice thing is you get immediate access to all the trading modules at time of purchase. You get the VectorVest system, so everybody starts off with a good foundation of the VectorVest system. We teach you the how to set up your searches in there and your graphs. And then we get right into understanding the moving averages, trading with a single moving average. If you just buy and sell whenever price crosses be above and below the 20-day moving average, for example, it is a popular trading system that I know some services teach. My experience over long-term study of graphs is you're going to lose money over time. But when you use our method of single moving average trading, you have a high probability of success based on stock selection and based on money management that we teach in the course. Trading golden crosses, moving averages as support and resistance. We talk about the 50-day, the 100-day, and the 200-day and their purposes. The complete EMA squeeze trading strategy, including the shorting side. Multiple moving average trading system. Folks, this is basically the guppy, both long and short, and it's become one of the most popular trading systems that we teach, and you're going to get the complete system here as well. Dr. Barbara Starr, you will have seen her articles in Stocks and Commodities magazine. She has been a past chairperson of the Technical Analysis Association, and she delivers this presentation on surfing the reversal waves. It's using the Bollinger Bands and a short-term moving average. It's a swing trading system, and from the feedback I've got from our course alumni, it's something they really like. We teach the Midas Touch system both the way VectorVest initially presented it, but we can also use it for the long-term investor, and we teach that as well. And then we have a bonus trading system, the trading the high-low moving average bands. And we give the 6 live mastery classes. So here's the bonus offers, those 6 live mastery sessions starting September 1st. They're at 2 o'clock Eastern time, but just know they're all recorded and put into your education thought industries software, so you've got them immediately shortly after this session. For current subscribers, you get access 60 days to the US Premium Real Time if you do not already have it. That gives you the Pro Trader add-on module and some other perks. For non-subscribers, you get the VectorVest software for 60 days, and that includes the US Real Time. And the access includes Pro Trader for technical searches, the Auto Timer Genius, so you can do some back testing. Okay. So you can go to this website and use your credit card, Francis, is the question, or you can certainly call our support team at 1-888-658-7638. But certainly we'd love to have you sign up today. Just let me know if this is something that you're either give me a 1 or give me a 1 if you've already decided you're going to take this course, and give me a 2 if it's something that you are really strongly considering. But 1 if you're ready to go, 2 if you're really thinking about it. I see Craig is thinking about it strongly. Francis is already committed. Dwayne is committed to do it. Ushut is asking what's the payment system, so I think he's in. Evelyn is a yes. I've got some thinking about it. Steve is probably a no. I think I would take from that a 4 in there. And then we've got a lot of twos that are very, very interested. So let me just entice you a little bit more. With the Pro Trader technical searches, you get that full access. And folks, here's what that looks like in your program. You're going to get a lot more than just what we teach in the course. If I go to the Pro Trader folder, look at these technical searches that you're going to get. All these moving average crossovers, which are completely adjustable, but they've got some pre-built ones set out for you. You can modify and save them in the folder if you like. You can never delete a Pro Trader pre-built strategy. Here's one of my favorites, the ADX and MACD killer crossover. So you've got those moving to the upside. You've got resistance breakouts. You've got the RSI crossing above 30 or crossing below 70. You've got the star search, which is different than the one that we teach in the course, which is really a reversal type of a search. So you've got a lot of different searches. I think there's over 30 pre-built searches. Channel searches, I'm always getting asked about channel searches, and we've got channel searches in here as well. Okay, so you're getting a lot more for your money than just the course and what we teach with Pro Trader. All right, so here's a more detailed description of all that you're getting. You know, the various courses or lessons that we teach. And each lesson really comes with a complete trading system that really takes the emotion out of your trading and gives you, you know, a really strong discipline for your trading. And I don't know about you, but when I started following trading rules, trading systems, that's when I became a better investor and trader. These are the dates now. They're always subject to change, but you can diarize these. They're also going to be in Thought Industries for you. So every week after you've had a chance to review the first couple of lessons, we start on September 1st. Not, you know, we just go through, I believe that's lesson 1 and 2 on the first mastery class. And then we just, every week we review the next lessons in the list, but we don't do them all
Hey,
at
Stan,
once.
one thing I wanted to mention, once someone signs up, they don't get it, they'll get immediate access to the course material, but they won't get immediate access to VectorVest Premium. So if you don't already have VectorVest Premium, your trial of VectorVest Premium starts on August 14th. So it's not immediate access to the software. It begins on August 14th. So that way, 60 days from that point will be our last session to get. Make sense?
That makes sense for
Okay.
for current subscribers. For new subscribers, would it be the same?
Same. Everybody will be given, no matter if you have the VectorVest Premium or not, or if you're a new subscriber or not a subscriber at all, August 14th is when everybody's VectorVest Premium US trial will begin.
Okay, awesome. All right, Eric is asking, you know, he's got another service. What's the advantage of VectorVest? Well, let me count the ways. I think I've showed you a few here. Our buy ratings are priceless, Eric. They're, you know, I've looked at other kind of indicators, and our buy rating is one of the best indicators, the fastest indicator. And we've got other tools that other services don't have, and of course our fundamental tools, the stock analysis tools, just, you know, the ability to rank based on earnings, based on sales growth, earnings growth, based on upside potential, so much more. There's just a tremendous amount, Eric, and basically you're getting a 2-month trial to VectorVest when you take the course for the cost of a course. And I think this is the most comprehensive course that you will find out on the market for mastering moving averages. You know, you'll have bits and pieces here and there, but this is totally comprehensive. Rob O said, thank you once again for a great presentation on multiple moving averages. That was the guppy. Your Mastering Moving Averages course, as always, is well documented and has a wealth of information. I really like the 20 moving average channel search. That's the bonus presentation and search that we give you um, after Mastery 6. I think the MMA course should be a fundamental course for new and experienced VectorVest users. It has been very educational, and I look forward to using the setup searches to advance my investing success. Thanks again and a great job. So that was Rob. And then Warren, he really did some testing and checked everything out. He said, after taking the MMA course, I am now able to better determine entry and exit points. My win-loss ratio following my old plan resulted in 51% wins, which isn't that bad, but he said he had very little monetary gains. If I would have followed the 20 moving average strategy, I would have had 75% winners and produced my largest portfolio gain. Using the EMA squeeze, I would have netted me 84% winners and the second largest portfolio gain. So there is typically some pullback off the highs with that strategy because you're waiting for the moving average crossover. The golden crossover strategy, this is different than what you're thinking about with golden crossovers. This is what we teach in this course. Would have resulted in 64% winning trades and the smallest of the three portfolio gains. I would have gladly taken half the portfolio gains in any of the three strategies. All right. So that is pretty much what I wanted to share with you. These are the international phone numbers if you want to call. North America, 1-888-658-7638 if you have additional questions. But by all means, if you have questions, email myself, stan.heller@vectorvest.ca or jerryd@vectorvest.com. We'll be glad to try and answer your questions about the course or anything that we've covered today as far as the EMA squeeze strategy. Just love to help you out. And during the course, by the way, even though you're looking at the recordings, there's homework after every lesson, and you can submit that homework usually to me, and I'll kind of help you out with any questions. And we kind of pull any questions you might have and put the ones that we think everybody would benefit from into the mastery classes so that everybody gets the insights from maybe a question or a success. Sometimes we hear really great things from people right away that implement the strategy fairly quickly, either paper trading, which we recommend, or putting real money, maybe smaller amounts, put that to work. And we'll talk about that in the mastery classes as well. All right. Any last minute questions here? Looks like Jerry has answered so many of them for you, and really appreciate that. Ron, I'm not sure when the offer ends, but I think, again, we're doing 2 more sessions tomorrow, and it is sort of the early bird for these sessions. The educational team may decide to continue it for a little bit. I know Jerry's doing a special presentation soon regarding it, so you'll have a little bit of time to think about it or ask anybody that you think might need to help you with a decision. We all know who that is. Yeah, Lynn, we actually offer Canadian content in the course. We do some setups and examples for the other countries in VectorVest, UK, Europe, and Australia. And we do spend, I would say the majority of time on the US side, though, just recognizing that many of our Canadian subscribers do trade US stocks, but more importantly, once you know the strategy, they work for any of our different countries, but I'd like to show Canadian examples for sure. Scott says, got to consult with the Minister of Finance. You have that connection, Scott. So there you go. Oh, that's great. Well, Schultz asks, does a 20-day moving average strategy work only on the buy side? It actually works on the shorting side as well. It's, everything in investing is opposites, right? If you have a setup for a long strategy, you can almost guarantee that the opposite indicators and setup is going to work for the shorting side. And that's certainly true with the strategies we teach in this course. Robert says, what about when you drill down and want to use a smaller time frame to get the trimming down or the timing down? Well, I just went to the 3 months, but pretty much I'm showing the daily on this EMA squeeze strategy, Robert. I don't, I don't trade it on intraday, but you can kind of take a look at that. Here's a stock that I traded and found with the EMA squeeze. And it's starting to go again. So let's have a look at it on intraday. So let's look at, we'll start with 5-minute bars, best fit. So it's breaking out again, right? And we've got the separation. So I don't know if that's what you mean, but you could trade this intraday, but it's not what I do, and it's kind of not what I teach or recommend. Okay, but the 3 and 8 works for intraday. You'll see that in the Jockey Club. Our instructors or coaches will use the 3 and 8 quite often, and that's pretty darn close to the 5 and 8 EMA. Okay, great. Glad that helped you, Robert. Well, Rachel, I wasn't talking about the 20 moving average, but with any of our strategies, unless you sell at a price target, you are going to have to accept that you're going to lose some ground toward the end. Because if you're waiting for the 5 EMA to cross below even the 8 EMA, there could be 1, 2, 3 down days before you get that EMA crossing. So you're always going to give up some ground unless you have the discipline to sell at a price target. And we do teach some ways in the course for setting a price target, not with every strategy or every lesson, but it's certainly something that is important, and we like to set a reasonable price target. Stephen says, I'm trying to order, but it says check to confirm at 29 at the elite price, I think, Stephen. So you might want to call if it's trying to give you the elite pricing. It may recognize you as an elite subscriber. I'm not sure why that would be. Maybe Jerry has the answer on that one. I'm not sure. I've gone past my time. Jerry may have had to go to his next webinar, but definitely call about that. Ben, thanks for the order, by the way. We love working with people with this course. It's a fabulous course. Well, listen, I've taken up more than my portion of time. I want to thank everybody for staying with us right to the end. Jerry has kindly put the slides into your handout section on the GoToWebinar control panel. So you've got that. I believe the recording is mailed out to you automatically by GoToWebinar. And for those of you that have been watching on YouTube, if you just scroll down to the sort of the description section, that's where you'll find the slide link as well. All right, so thanks everyone. I really appreciate all your questions and your participation today. Very much appreciated. Andrew says, can I buy now and get access of September 1st since I'm on vacation? Well, you'll have access for 1 full year, Andrew. So beginning April 14th, which I think is Saturday, you'll have access to all the recordings, and you'll have access for 1 full year. And the mastery classes actually start on September 1st, just when you're back from your vacation. But those also are recorded and put into the thought industries for you as well. Thank you, Stephen. That's awesome. I appreciate your kind comments. And Mark, thank you for that as well. And thank you, Andrew. Appreciate that. Okay. Thanks, everyone. Have a great rest of your day and look forward to seeing you on the course for those of you that are going to be joining us. And otherwise, we'll see you in the webinars going forward. Thanks, everyone. All the best.